Good afternoon. Today is Monday, March the 13th, and the time right now is almost at noon. We are 11 and 45 minutes, 15 minutes towards noon. So maybe it's still morning. Anyway, the day started off very aggressively. We know what happened over the weekend. On Friday, last week, we have two bank failures in the States, all based in California in the span of just 48 hours. A major U.S. bank actually closed down, and this bank is actually well capitalized at $206 million, and it just collapsed in just 48 hours. That sent a shock wave across the banking systems, and now there is a bank run going on in the States. And this morning we received yet another crypto bank signature has been seized by the FDIC. So right now we have three banks, U.S. bank failures in just less than a week, and this is causing a lot of fear in the marketplace. There is a run on the bank, and people are pivoting away from risky assets to find safe havens. Normally, there's a bit of uncertainty in the market. Speculators, investors will definitely pivot to find safe haven investments, and the typical shelter they will go to will be U.S. Treasuries. So now people are moving to short-term U.S. Treasuries, like maybe the 1-year Treasuries or the 2-year Treasuries, and then of course they will also pivot to gold market, and we can see that gold actually rose quite significantly on Friday, and this morning it continued to extend higher. And then the other one is, guess which currency they will find safe harbor in? That is the Japanese yen. So we can see these three assets right now is benefiting from the fear that's overpowering in the marketplace right now. And of course, this is the first business day in Asia, and we will US will be watching very keenly what are the investor reaction in Asia, and then we will see later on when London opens how the European reacts. I'm sure by the time the US market opens, they will have enough time to come up with something, or somebody will say something positive to address the situation. Now, based on what we've seen so far on Friday, this is the Dow Jones Industrial Average daily time frame chart. We can see that the market actually has been going down most of the week, except for Monday when the market actually charted into a new high. Remember the week before, the market actually closed on a high note, okay, to 33,572 on Monday morning. And what a different a week make this week. The market opens on a soft note. Now from 33,572, it is currently trading below 32,000. The closing price for the Dow Jones itself was 31,909.65 on Friday. And of course, this market does not reflect what happened in Asia so far, but expect the market to actually move aggressively downwards. Maybe it will open with a very low price, but then we will see whether the market can rebound. But by and large, we look at this structure right now. This market looks like a three wave, but this three wave has the danger of accelerating to the downside. And if the market continues to accelerate to the downside, there is always the risk that the market goes up all the way and break the 31,000. That would mean that the market would have picked up at 34,712 this round, and the market is resuming its larger degree downtrend. So the risk is in the Dow Jones continue to trade much lower. So again, do watch out for what happens in the US when the market opens at 8:30 p.m. Now remember, today is the start of the reverting back to the daylight saving. That means the market will open 1 hour early. So if you are trading US markets, do be aware that the market will open 1 hour early at 8:30 p.m. Singapore time. Over in the S&P 500, we can see that the sell-off is also quite obvious. The market have a three-wave rebound, although it structurally does not look complete to me, but the market, because of the latest development in the States, now there's a very high possibility the market have already peaked at 4,195, and the fact that the market has traded and closed below the rising channel is another negative as far as technicals are concerned. This gives rise to the idea that maybe the S&P 500 may have already seen the top this round. And if this is the case, the market is resuming its larger degree downtrend. So the risk is again to the downside. However, when you look at the Nasdaq 100, you know, the structure doesn't look that bad for the Nasdaq 100. Yes, the market has come off, but it is not as severe, okay? Whereas the Dow Jones is already trading at the year's low, the Nasdaq 100 is, only lost back less than 50% of its gain. the high so far this year is 12,881. This remains the high, and this is the February high. So right now we are seeing a possible extension of the three-wave move, and the target immediately is at 11,416. So we will have to watch how the Nasdaq performs. I think it will be the last to flip over. Okay, but when we look at another index, which is the Russell 2000, this is a small cap index. We can see how severe this is. The market right now, although have not taken out the year's low, which is the year low is somewhere around here. Let me see. Let me put a level to it. The year low for the Russell 2000 is 1,737.26. So we are getting there. Okay, if the market over the next couple of days closes below this 1,737, it is joining the Dow Jones to trade at the year's low. So we have a bluers or blue chip, and this one is the small cap index, both showing the same kind of sentiment. It is definitely not a good sign. Okay. Now over in Asia, we can see that over in Tokyo, the Nikkei 225 opens with a gap down on Friday. It gapped down again this morning, and we have 2 days of loss, and we are only in the first half of the day, and we have a second half in the afternoon. We will have to see whether the market closed on the more positive side, but it does not look like it is going to be the case. I think at best we can crawl back some of the losses, but I think by and large the market possibly have already peaked at 28,735, because this is a three-wave rally, and it has exceeded my target by just a marginal about 200 points, and then now we have a major reversal. So when we look back, this looks like a spinning top to me. Okay, this is a doji, and this one looks like a spinning top, and that is a bearish development. Okay, now we can see 2 days of gap down, and there is every possibility today may also end weak for the Nikkei 225. So the pressure is to the downside. The interesting thing is that while the Nikkei is falling apart, the Hang Seng and the mainland index seems to be holding up very, very well. Now, in terms of technicals, we can see that the high traded for the Hang Seng index at 22,700 managed to hold at 19,300 thereabout, because this is the year's low. Okay, at the beginning of the year on January 3rd, this was the low traded before the market ran up all the way 23,700. Okay, so 22,300, and now on Friday the market tests this level and then closed marginally below at 319.9. This morning the market actually rebound. I have to find out what is the reason for the rebound. For now, I have no reason. I have no idea why the market managed to hold. Now, when we compare this to the mainland index, with the Chinese mainland index, we also saw that the market also have a rebound. Okay, at least in so far in the first half of the day. Okay, but by and large, you can see that this three-wave rebound has possibly topped out at 4,267.6. Now, this is the CSI 300 index, which is also another much monitored index in this in China. So we can see that so far the market pulls back. It's only three-wave, but unfortunately it has been trading below the rising channel. So that means that the market is technically speaking is going to be trading to the downside, more likely to be the case. If there's going to be a rebound, the bottom of this support now will become a heavy resistance line. So do watch out for any rebound to be kept around the bottom of this support line here. Over in energy market, we can see that crude oil market remains in consolidation. Nothing much is happening. Although I have high expectation going into the week. Last week itself, I was basically holding on to long position. I was hoping to see $82 per barrel and possibly $84.70 per barrel. But the market top up at $80.90, and that was it. And it had been trading basically downside all the entire week except for Monday. On Friday, the market have a bit of a rebound. But you know, this rebound is so tentative. Most likely the case, we can see that it is trading broadside, so it is basically in consolidation. So maybe what I'll do is I'll just monitor. I will probably not be actively trading energy market for now. Okay, my only active position have also been taken out last Friday during the fall. I was basically long natural gas, but I moved my stop to break-even point. So despite being stopped out, I did not suffer any financial losses. But I have two working orders to buy at the lower bottom, because I am looking at this structure and thinking maybe this market will do a three-wave rally. So my target is $3.48. So if my long order, my limit order on the buy side get filled, then I'll be targeting $3.48. Okay. Like I said, the focus will be on gold prices. Gold actually saw a massive run up last Friday. You can see Friday has a massive run up despite what happens. So you can see the shift to what we call safe haven assets is very obvious in the gold market here. Gold was actually struggling. In fact, it was coming down from 1,959 levels all the way to test the $1,800. Okay, and then at one stage, it looks like it probably will trade even lower than what happened on Friday. The market actually rebounded very strongly. And this morning, we have a spike up to $1,894.5. And this is also what a rise of 1.618. Now, this is a key technical point here. So what may happen later in the day, we may see a bit of pullback and then another attempt to trade beyond 1,895. Okay, so I think there will be another high coming. So do watch out if the market unfolds in this way without taking out this high here. Okay, then we have a potential 5-wave move. Okay, $1,858.36. This is basis the spot market here. So if you compare against the COMEX gold market, the equivalent level will be $1,864.40. So if I take away this, you can see clearer. This is the one level the market cannot trade under. Okay, so if you want to maintain its overall bullish outlook, I think $1,864 is going to be key. It should not trade below this level anytime soon. So if we have a pullback later on in the day, so long as the pullback does not overlap the $1,864.40, it should give the market another run up beyond 1,900. Okay, so we can see another rally is coming. So over in the silver market, we don't have such a robust rebound, although it also rebound on Friday, but we can see that it is still very tentative. This is basically the COMEX silver futures. Okay, we can see that rebound here. So, but this is not very clear. So we maybe what we can do is look at the cash market. This is the daily time frame. So in terms of comparison between silver and gold, it appears that the actions are all centered on gold market for now. So maybe if you are going to trade precious metal, maybe you're better off just monitoring the gold market. Okay, over in the dollar index, the dollar actually pulled back a little bit on Friday. We can see there was a pullback on Friday after a tentative pullback on Thursday. So this morning we can see the market continue to trade to the downside, and the top so far for dollar index is 105.87. So at the very top here, you can see that the market is basically quite firm. This is a counter trend rally because the dominant trend is down in the daily time frame. So, but what looks like a potential rebound, it is still very possible because at the top here at 105.87, which is on Tuesday, this looks like a spinning top to me. Okay, so if this is a spinning top, then the market has a bearish implication because subsequent days the market actually went down. Okay, so this could actually result in possibly a 3-wave move. Okay, so long as 1,068.68 is not taken out, there is still a possibility of a 3-wave rally. Okay, so I'm still mildly positive on the dollar itself. So we will have to see how the market reacts. So as the dollar pulls back, the other major currency will obviously rebound. Okay, so we are seeing that in the euro dollar. The euro dollar actually stabilized on Wednesday midweek last week, and then it has been rising, and then accentuate on Friday, and this morning we can see follow through buying in Asia markets. So this rebound here is actually the reverse of what we saw in the dollar index, and it's very natural. But by and large, I do think that although we have a 5-wave rally here, so this will be actually the 4th wave or one lesser degree. So if this is the case, technically speaking, forget about all the other reasons why you want to buy currencies and sell dollars. This is enough for us to say technically we want to long dollar because we have a very neat 5-wave rally, 3-wave pullback, and this is a classical entry levels because this is the 4th wave for one lesser degree, and the price is 1.184. So you can see the low traded this round last week, okay, was actually 1.18. So it actually overshoot by 40 pips and the market reversed. So this is a very technical market. So if this is the case, the market could be getting ready for another set of 5 wave. Okay, so if this is the case, now remember, can you imagine this is a 1,100 pips move? Okay, so if from the low here, if we extrapolate 1,000 pips, that will give us a relatively good idea what is the potential for this move here. So we will see. But anyway, this is a preliminary 3-wave pullback, and this pullback is by no means over unless 1.2448 is taken out. So until that level is taken out, the market can unfolds into a more complex corrective pattern. So maybe it is too early to call for a long in currency so far. Okay, but by and large, technically it does look good. Okay, so that will mean the dollar may actually pulls back based on the structure in the euro versus the dollar. In the sterling versus the dollar, we are looking like also something like a 1, 2, 3, 4, 5. Okay, so the fourth wave or one lesser degree is this level at 1.048. Okay, so the low traded last week on Wednesday was 10524. So we have a bit of a room downstairs. It did not quite hit its target, unlike euro versus the dollar. So this is also supportive of the idea that this is going to be and we're likely to see another leg higher of the same equal distance. You see, from here to here, we are talking about 600 points. No, 1,600 points. 1,600 points. So basically, we have a lot more potential in sterling versus the dollar rather than the euro versus the dollar. So if this is going to be one more leg higher of the same magnitude, then we can see the market can actually go a lot higher. Okay. Over in Aussie, the dollar strength is not so evident until this morning. While the dollar was pulling back, the Aussie was also going down up to last Friday. So up to last Friday closing price, the Aussie market is actually pretty weak. Okay. Not weak. The Aussie market, the Aussie itself is quite weak, okay, relative to the dollar. But this weakness now is coming back. We can see that the Aussie has is regaining back some lost ground on the back of a strong gold market. Okay, so basically we can see the rebounds coming in. So by and large, you can see that this is. Can you say this is 5 wave? Not very obvious. Okay, I won't say it. 1, 2, 3. 4, 5, okay, possible. Okay, then we have a 3-way, but this 3-way looks a bit deep. Okay, and if the market do take out this level as it goes lower, then of course the 5-way scenario will not be in play. Okay, but it doesn't look like a neat 5-wave rally, so it is not so obvious in the Aussie market. Now when we look at dollar versus the yen, you can see that the dollar yen, okay, has pulled back for 3 consecutive days, although today it's not over yet, but we can see early morning session the dollar continued to weaken against the yen, and this is what we call a move to safe haven. Earlier on I did mention when you are unsure where the markets are going, when there's stress in the financial markets, you will want to seek safe haven assets. Typically you will do so by buying US treasuries, especially the short dated one, and then of course precious metal is the other one, and of course now we have another instrument in which typically speculators will seek safe haven in the Japanese yen. So we can see Japanese yen has strengthened 3 days in a row so far, from a high of 137.90 on last Wednesday. So we can see the dollar is pulling back, but by and large, I can say that this rally here is possibly not over. Okay, there is a possibility here. Unlike the structure in the euro and the sterling versus the dollar versus the yen structure looks a bit different. We do look like 1, 2, 3. This is part of a 4, provided the market does not go under. Okay, go under where? I think we will have to look at this level here. 131. Okay, 131.11 is going to be the level to watch out. And then what happened is that if this is the case, then we possibly will see another rally higher to above 130, 138. So the structure in the dollar yen looks very different from the euro versus the dollar and the sterling versus the dollar. So where will the dollar be hitting? I think it will be a bit of a mix. So when we compare that to the dollar versus Canadian, the dollars Canadian have a very distinctly different structure altogether. We have a 3-wave rally, hit my target, which is 138.50. The market went up to 138.62 and then reverse. Okay, this is this morning. Up to last Friday, it was still trading on the high side, and then this morning it actually gave way. So that could be the completion of a three-wave rebound. If this is the case, the dollar is primed to trade much lower. So from different currency pair perspective, the dollar outlook is unsure. Okay, there are elements that say that the dollar may actually weaken over time against the euro and the sterling. But when you compare that against the dollar versus the yen, the dollar looks like it's going to continue to trade higher versus the yen. Okay, so by and large, the net result is that the yen's weakness is going to be here for quite some time. Okay. So let's go on to cryptocurrency. This morning, we have a big run-up in cryptocurrency prices. Now, what happened was last Friday, news of the failure of Silvergate, which is a crypto bank based in California. The day before the announcement that SVB, the venture funds bank, actually fold very, very swiftly. Within 48 hours, it was taken over by the FDIC, which is the insurance, the government agency that actually guarantees the deposit in the States. But you see, the deposit is only good up to $250,000. Now, most of the customers for the SBB, these are venture capital that they definitely have a lot more than $250,000 parked in the bank. So those as much as 95%, maybe even more, are now as good as gone. Okay, 95% of those funds, because even if you account for the FDIC $250,000 insurance, it does not even come near to covering those costs. So right now the fear is spreading that maybe other regional banks may actually fail. And this morning we woke up on the news that Signature Bank, another crypto bank, has again failed. So this is going to spread the fear element. So what we can see here is that initially the market actually reacted to a downside. Okay, then on Friday, the market broke 20,000, trade to a low of 19,569, and then on Saturday it managed to rebound a little bit, and then on Sunday there was a major spike up because news of another bank, crypto bank failing. This time it's called Signature Bank, which is again another crypto bank that failed. That caused, now the Signature Bank does a lot of business with this exchange called Circle. Now Circle, as we all know, for those in the crypto business, is big in USDC, which is a stable coin. So right now, we see a lot of people dumping the USDC stable coin, and they all pivot to the main token, which is Bitcoin. Okay, so we can see Bitcoin suddenly see a surge in demand because people are dumping the USDC. As far as the news that I can read, is inferring to that fear of the stablecoin being further unpacked. Right now, we are beginning to see an unpack of the Circle token, the USDC, okay, relative to the actual pack itself, because it's pegged to the dollar. So right now you can see that there's a bit of a break of the pack. The people are getting worried, so they are buying their Bitcoins. Okay, so we can see this morning it surged above 22,000 to a high of 22,775. So this is a move that is actually extends a lot deeper than I expected. So now there is a risk that the market may not hold at 22,775. It may actually come back down and take out 19,569, which is the low on Friday. So because this is a 1, 2, 3 solo, there's an overlap here. Okay, maybe that's the case. Let me see. Sorry, let me update this. Okay, there's a bit of a bridge, because if this is a 5-wave move, we cannot trade beyond $22,770, but it trade beyond by $5. So this 5-wave scenario may not actually hold true. But then again, when I look at this price this morning, I have long position. I quickly sell off my long position, not knowing what this could be a knee-jerk reaction for all I know. As to where it will head from here, because the entire crypto world is also shaken by the fact that within a week, less than a week, we have 2 crypto banks that actually failed. So this is going to put downward pressure across the entire crypto space. So I'm not comfortable holding on to long position in any of the coins. So I've unloaded not only my Bitcoin this morning, I've also sold off my Ethereum. Ethereum also went up to a high of $1,634.80 this morning, from a low of $1,369.90 on Friday. So this is a big move. Over on Friday closing in New York to the Monday opening, you can see the market has jumped more than $330 in one move. This represents a 14% rise in the value of Ethereum. So when I see this one, I quickly unload my Ethereum prices position, now waiting for the market to pull back. So not sure where it will head from here onwards, because I believe this is a knee-jerk reaction. Okay, so the other coins actually have hardly any movements. Okay, when you compare this Bitcoin and Ethereum price, when you compare to Ripple, there's hardly any movement. So it is quite concentrated on these two main tokens. So I don't think it is across the board. When you look at Dogecoins, we are seeing the same thing. There's hardly any movement. There's no spike in prices in other tokens. So it's only centered on these two coins. So be very careful going forward. This is all I have for you for today. And hopefully, things will get better as the New York market opens tonight. Now, remember, today is the start of daylight saving again. That means to say that the hour is moved 1 hour forward. US market will open at 8:30 p.m. Singapore time. So be aware of this change, okay? Okay, guys, this is all I have. I'll see you tomorrow. Bye-bye.